Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Peloton Interactive Inc. They trade on the NASDAQ under the ticker symbol PTON, and they announced earnings today, and you can see by the post-market move down nearly 6% on a day where they were already down about 2%, that they were not very strong earnings. So the platform I'm using today is TD Ameritrade. I don't have the exact numbers built into the fundamental analysis that we normally look at here. So these valuations are going to be based off of not most recent quarter data that came out today. So keep that in mind. The other thing that I would highlight is we can look at some of the items as to why the stock is trading lower. The first thing that I'll highlight is on the earnings call, they said that they are taking their original bike down, their lower cost bike, which right now does sell for nearly $1,900. They're dropping that price by about $300, going all the way down to $1,495, so about $400. That is a 20% decrease. The reason why they're slowing this or dropping the price is due to slowing growth. This is a company that excelled during the course of 2020 because of the COVID shutdowns and the demand for that gym environment, that atmosphere was heavily in place. That caused the stock to shoot as high, if we go back to the fundamentals here, to go as high as at the beginning of this year at $171 per share. Last year that was $167, but you can see that that was coming up from $17.70 a share. So they skyrocketed during that point in time. Now, the other thing that's important to note is that they had some incredibly high multiples, especially the price to earnings. So the company was profitable. However, we're seeing that trend start to slip. So not only are they seeing slowing growth and they're decreasing prices, but they're doing so as they begin to see some of that income earning potential start to slip. So what I have here is not their Q4 earnings. Their Q4 would have been what is traditionally Q2 for a lot of calendar year-end companies. They do not run on the same fiscal year-end as a calendar year. So their Q4 is what they just announced, another loss. It's actually widening. And you have to look at this and see that that total revenue has continued to climb pretty steadily, even during post-quarter time period. And you can see just the explosive growth from 2017 onwards. The concern here is that they are seeing an incredibly high increase in the selling general administration expenses, but we're not seeing that same uplift. So this cost continues to go up while the sales are not increasing as rapidly. So you can see here just from Q1 2021 of last year, we were at $197 million, all the way up to 6 months later at $356 million. That is a huge increase and one of the key drivers in losses in this portfolio. So they had strong net income, especially in last year, and they're now seeing that go down into the negative. So negative 18 million down here, negative 9 million on the net income, but that was coming after the prior 3 quarters with having nearly 200 million in total profit over those 3 prior quarters. So the question here is, what is the next steps? What can they do going forward? The big thing that we want to highlight is, despite the fact they had a huge loss associated with this, they did have an increase in the remote fitness classes. And that is for the most part, I believe it's a $40 a month fee. And they have right now 2.3 million people on that. So those do have much higher gross margins. I think there's a lot of value there. The question is the company going to be able to recover from a lot of the recall activity that they had with their treadmill? Are they going to be able to justify their valuation? So again, keep in mind that they had a significant drop in price after hours. I expect they'll continue to open low. Price to earnings, this is going to drop significantly, not just because the price of the stock dropped, but because the earnings dropped as well. So this will stay high, but definitely drop. Price to sales will drop as well. The thing that I would highlight is the profitability. This may go completely away based on a trailing 12 months because, again, they just announced another loss. So the question is, can they make this profitable? For the actual cost associated with the product, very profitable. I imagine a lot of this is driven by their 2.3 million subscribers. How can they translate this into profit, and can they justify their valuation right now? Because again, they're trading at a significant multiple to their earnings, and that can be concerning when you see stuff like this of how does that work out. I am bullish in the company long term, but I think that we're going to continue to see a major correction in the price near term until they can fix some of these issues. Right now, if we look at the year-to-date move, I think we are going to see new lows well in place. So off their last earnings, where the price of the stock was all the way down into the low 80s, I don't think that that's out of the question on this run. Because the earnings were poor, because the company is lowering guidance, there's a lot going on. For that reason, I think that I would not be going into the stock right now. I don't know if I'm going to short it. Premiums are definitely going to be juiced tomorrow, but this is one that I like the company long term. It does have upside, but in the short term, I think that we're going to be in trouble holding these levels solely just because, again, there was just not a lot to like about these earnings. You don't want to see the product drop in price with the idea of, hey, this is going to help us increase demand, because yes, they're going to start getting those $40 subscribers. I think there's a lot of value in that, but you're cutting $400 straight to the bottom line, so you're going to have at least 10 months to recoup that, assuming they pay during that entire time and you're able to keep those people online. So that's just some of my opinions associated with Peloton Interactive. Like the company, like the idea, don't necessarily like the valuation right now. Just my opinion. I'm by no means a financial advisor. But if you find my opinion helpful and you like this content, please consider leaving a like and subscribe. It's greatly appreciated. And I will talk with you all later. Thanks.